First thing we have to do is to identify liquidity levels on 15-minute time frame. Always choose swing highs and lows as your liquidity levels. We have to mark every liquidity levels we can see on the charts to target those levels. Then we will wait until one of our liquidity levels gets taken out. As we can see, our sell side liquidity has been swept. So we'll go to the 1-minute time frame and look for confirmation of a change in market structure. As you can see, we now have to wait for some sort of bullish confirmation. We are waiting for this bearish fair value gap to be invalidated. But instead of being invalidated, the market ends up rejecting from this fair value gap. Now the market has invalidated the bearish fair value gap, which gives us confirmation that the market is ready to go higher. We can also see that there is another fair value gap at a premium level, and such fair value gaps have a higher chance of being respected. So we will wait for the market to invalidate that one as well. The market has now invalidated that fair value gap too. And we also have another confirmation, change in the state of delivery. Therefore, we can enter a long position, placing the stop loss below the inverse fair value gap and targeting the buy side liquidity we had already marked on our charts. Now we can see that the market has swept our buy side liquidity and hit our first target. So we can expect a retracement below the discount level of the range from the low to the high. Since we have a low under the discount level, we'll wait for the market to take out this liquidity as well. As we can see, that liquidity level has been taken out, so we'll once again wait for bullish confirmation. We now have bullish confirmation, a change in the state of delivery. So we'll enter a long position, place our stop loss at the low, and target the 15-minute buy side liquidity that is still resting above. Now the market has created a high and started moving lower. So we can once again measure the premium and discount of the range. We can see that there's a low under the discount level, which has been taken out. Once again, we have a bullish confirmation, a change in the state of delivery. So we'll enter a long position, place our stop loss below the low, and target the 15-minute buy side liquidity. Now the market had taken our 15-minute buy side liquidity and reached our final objective. After watching this, you can see that until market takes our final objective, we can take multiple entries whenever it retraces back to the discount levels of generated range. You can take one position and hold until it sweeps the final objectives, or you can also enter multiple positions as I have described in the video. After watching this, you can see that until the market reaches our final objective, we can take multiple entries whenever it retraces back to the discount levels of the generated range. You can take one position and hold it until the market sweeps the final objective. Or you can enter multiple positions as I have described in the video, but make sure it should have a higher time frame liquidity level already swept.